Commercial Arithmetic. Commercial Arithmetic deals with operations and computations in commercial activities such as borrowing and lending money, hire purchase, taxation, appreciation and depreciation. Quick look at principal, rate and interest. Whenever money is lent out, a charge is levied on that amount. Similarly, when deposited in a bank, the money earns some more after a period of time. Principal is the amount deposited, lent or borrowed. Interest is the excess amount earned or charged on the principal. Rate is the percentage charged or earned after a certain period. Simple interest. Amount of money charged or earned on the principal only is called the simple interest. It is calculated as a percentage of principal per annum, abbreviated PA. If an amount P is borrowed at an interest rate of 2% per annum for a time of T, then interest I is given by I is P times R times T over 100%. For example, 100,000 lent for 3 years at 4% per annum, the simple interest will be given as 100 times 4 times 3 over 100, which is 12,000. The total amount at the end of the 3 years is given as principal plus interest, which is 112,000 shillings. Note that simple interest is only calculated on the principal amount irrespective of the time period. For our case, the first year earned an interest of 100,000 times 4 times 1 over 100, that is 4,000. Therefore, the total amount after the first year is 104,000. However, interest for the second year is calculated from the initial 100,000 and not current 104,000. Thus, each year the principal amount earned 4,000 as interest. For 3 years it's 12,000. Simple interest is the same each year and is therefore proportional to time. The difference will be clear when we do compound interest. Next. Compound interest. We have seen that in simple interest, amount at the end of a specific period is principal plus interest. If the amount at the end of the year is taken as the principal for the second year, the interest earned is called compound interest. Taking the example 100,000 for 3 years at 4%, now at a compound interest. In the first year, we have interest given as principal times rate times time over 100, and it is 4,000. The amount at the end of the first year is therefore 104,000. Taking this amount to be the principal for the second year, we shall have interest of 4,160 shillings. Now the amount at the end of this second year will be 104,000 plus 4,160, which is 108,160. Now the principal for the third year will be the amount at the end of the second year, and then we calculate the interest, which shall be 4,321. Therefore, the amount at the end of the third year will be 112,000 $12,432.40. Total interest is therefore $12,486.40. Note that the compound interest earned is greater than simple interest for the same period of time. Compound interest formula. Taking principal to be P, rate to be R, period to be N, and amount to be A, interest for the first year is given by I is P times R over 100 times 1, which gives us PR over 100. Amount at the end of this first year will be given by P into 1 plus R over 100, equation 1. In the second year, the principal for this year will be the amount accrued in the first year. That is, P is equal to A1. Interest will be calculated as usual, and the amount at this second year will be given by P into 1 plus R over 100 squared. Similarly, for third year, we shall have total amount as P into 1 plus R over 100 raised to power 3. In general, the amount A at a rate of R for n years will be given by A is equal to P into 1 plus R over 100 raised to power n, and this is the compound interest formula. Note that in simple interest formula, we calculated the interest directly, while in the compound interest formula, we calculate the amount accrued. For example, 500,000 borrowed from a bank at 4% compound interest. Find the amount accrued after 3 years and find the percentage interest. P is 500,000, R is 4, N is 3. Applying the formula, we find that the amount is 562,423 shillings. Interest is therefore 62,432, and this represents 12.49%. Half-yearly and quarterly interest. When interest is paid half-yearly, there are 2 installments of interest paid in a year. 4 installments are paid for quarterly interest. Under such circumstances, the interest rate is divided by 2 or 4. The period is multiplied by 2 or 4. For example, Kenya shillings 20,000 deposited in a bank at a rate of 4% compound interest with interest added half yearly. The amount after 3 years will be P is equal to 20,000, R is 4 over 2, N is 3 times 2. Therefore, applying the formula, we have the amount as 22,523.20. Appreciation and depreciation. Appreciation is the increase in value of a commodity. Depreciation is the decrease in the value of a commodity. Most commodities depreciate with time as a result of aging, wear and tear. A few appreciate with time. For example, land will always appreciate, but machinery will always depreciate. The rate of appreciation and depreciation are expressed in percentages. It is used to determine value after a given period of time. For example, A piece of land cost 400,000 3 years ago. It appreciates at 3% per annum. What is the current cost? We use the compound interest formula, and substituting in the values we end up with Kenya shillings 437,080 shillings. In depreciation, the same formula is used, but the plus is replaced with a minus. That is, A is equal to P into 1 minus R over 100 raised to power n. For example, a vehicle cost 1 million. It depreciates at 2% per annum. Find its value after 2 years. Applying the formula above, we shall have Kenya shillings 960,400. Let's jump over to hire purchase. Sometimes a customer may not be able to pay fully for a commodity. The seller may accept a small amount called deposit. The customer takes the commodity and the balance is paid in equal installments of weekly, monthly, or after a given period of time as shall be agreed. Such arrangement is called hire purchase. In the end, the customer will have paid a larger amount than if the commodity was bought in cash. The advantage is, however, that he or she would be using the item before settling all the bills. For example, a vehicle sells at 1.5 million. A deposit of 50% is required, with the balance being paid in 20 monthly installments of 45,000 per month. Find the total amount paid, the interest, and the percentage interest. In our solution, 50% of 1 million is 750,000. This is paid first. The balance is 750,000. The total amount paid will be 750,000 plus 45,000 times 20 months, which gives us a total of 1,650,000. The interest accrued is 150,000, and this represents a 10% profit. Over to taxation. Tax is a charge levied on individuals and companies. The purpose is to raise money for the government to provide services such as health, education, security, and others. In Kenya, the government levies two types of taxes. One, direct tax, which include income tax that is levied on income of individuals, and corporate tax levied on the incomes or profits made by companies. 2. Indirect tax, which include VAT levied on consumer goods and services, excise duty levied on locally made goods, custom duty levied on imported goods, and export duty levied on exported goods. Other sources of government funds include business and trade licenses, road licenses, airport taxes, parking fees, and so forth. Income tax. This is tax levied on individuals' wages and salaries. Taxable amount is the total amount subjected to taxation. Allowances are also part of one's income. Pay as you earn is the amount deducted from the individual's salary that is tax payable. Gross salary is the amount the individual acquires after taxation. Tax brackets or bands are used in calculating income tax. Note that after calculating the tax due on the income, a personal relief is deducted to get the tax chargeable. Any income equal to or less than personal relief is not taxable. The rates of charging income tax are revised from time to time. Well, here's a sample of tax bracket as of 2005. Let's use an example to illustrate how tax is calculated. Suppose a civil servant earns a basic salary of 50,000 per month, hardship allowance of 12,000 a month, medical allowance of Kenya shillings 15,000 per month, and transport allowance of Kenya shillings 10,000 a month. Let's calculate his taxable amount, pay as you earn, and his gross salary. Now the taxable amount is basic salary plus all the allowances. So I have 50,000 plus 12,000 plus 15,000 plus 10,000, and that gives me a total of 87,000 shillings. 87,000 shillings. The pay as you earn, we now subject this amount to the tax brackets. In the first bracket, we tax all the amount between 0 and 10,164. So I need 10% of that, which gives me 1,016.40 cents. 1,016.40 cents. In the second bracket, we tax all the amount between 10,164 and 19,741. The amount in between is 9,575. I need 15% of that. That gives me 1,436.25 cents. 1,436.25 cents. In the third bracket, we shall tax all the amount between 29,316 and 19,741. So the amount in between 19,741 and 29,316 is 9,575, just like in the second bracket. 20% of that is 1,915. 1,915. Now in the fourth bracket, I tax all the amount between 29,316 and 38,891. The difference is 9,575. 25% of that gives me 2,391.75 cents. 2,391.75 cents. So far, I have taxed 38,891. 38,891. The amount remaining from the 87,000 is the difference between these two figures, and I have 48,109. 48,109. I subject this amount to the fifth bracket. 30% of this gives me 14,432.70 cents. 14,432.70 cents. Now the total tax is the sum of all the taxes, that is 1,016.40 cents plus 1,436.25 cents plus 1,915 plus 2,391.75 cents, 14,432.70 cents. The sum of that gives me a total of 19,277.10 cents. 19,277.10 cents. Now I deduct the personal relief of 1,056 from all this total tax. I get 18,221.10 cents. 18,221.10 cents. That is the total tax that this person will remit to the government. So the gross salary is 87,000 minus the tax, 18,221.10 cents, which gives us 68,778.90 cents. 68,778.90 cents. That is the amount this civil servant will take home.
When thinking about your career and wondering what to study to equip yourself for the working world, MSc is the college to help you make this decision. We have 23 campuses nationwide and a wide range of aligned and accredited programs to choose from. Best of all, easy payment terms and flexible class times. MSc College is your ticket to a better life. Call 0860 672 265 or visit msccollege.co.za.